In today's video, I'm going to give you 3 Yieldmax stocks that I think everyone is sleeping on. Plus, if you stick around until the end of the video, I'll give you one extra fund that I'm buying for my portfolio to increase my dividends and performance. Our Yieldmax dividends help us earn over $500,000 per year in dividends, as you can see below. Now that number has gone up from 400 back to over 500,000. And our performance shows that we're up 40% for the year. After today's gains, we'll be up 40% tomorrow. So we're up 40% and we're earning over $500,000 in dividends, living financially free from our 9 to 5. If you need help doing the same, email me for my e-guides at akintalk48@gmail.com. Everyone knows that I use margin here at my channel to get ahead. For every $1 you put in your account, you get $4 of purchasing power. So I'm just using a small amount of that over 1 million in purchasing power to get ahead. This margin debt of 600,000 approximately that you see here below is low interest. I've negotiated it down twice. Many of my clients who bought my e-guides did the same thing. When you buy my e-guides, you get my phone number for life. So please keep that in mind. Anyway, we're going to discuss 3 Yieldmax stocks that I think, again, everyone is sleeping on. And first we have Airbnb, okay? ABNB. So it had a nice run from 120 to 150. It's since pulled back to 130. If you go on a chart, you'll see that this is actually, at a decent technical support area, okay? On a 1-year chart, you'll see that it's right on the 50 here. So yeah, it had a squeeze out of this and a pullback recently, but I think that Airbnb has a bright future. I mean, it's a great business. It just got implemented into the S&P. And I mean, it has 80% plus margins. It has 11 billion in cash, only 2 billion in debt. It has international expansions happening. So I think it's a good place to be. We need more consumer cyclical. All right, this is a tech play, but it's also a consumer cyclical play on the travel side of things. So ABNY is my first Yieldmax pick that I want to discuss with y'all that I think, again, everyone is sleeping on. And ABNY is also 50% maintenance. So be aware of that, okay? It's not the worst. We have some Yieldmax names that are 100% maintenance, but ABNY is 50% maintenance, so that is somewhat dangerous if you're investing at E-Trade. If you need help understanding maintenance, that's in my Volume 3 e-guide. We always need to be able to withstand over a 20% correction, so when you have high maintenance, that takes away your bailiff for withdrawal, and I always want to be able to pay my bills and live freely out of my brokerage account. I can swipe my E-Trade card and go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want at often lower interest rates than credit cards are, but I need to be able to withstand over 20% corrections in order to do this. So luckily I'm indexed to Cornerstone. Cornerstone is my largest holding. It is a 4-star fund, as you can see here on Morningstar, and it moves upper left to right on its chart. It's been destroying everything that I know of as of late. Here's CRF here on its chart. It had a huge move, okay? This is tied to the indexes with a 20% dividend, and it drips the dividend down at the NAV for 30% gains now every month. So we were at 26% gains for Cornerstone every month when we're dripping our 21% dividend down at the NAV. That's free money every month, but now we're getting 30% gains every month by owning Cornerstone, and that's how I'm preserving all of my equity at the same time, because Cornerstone is 30% maintenance, all right? If you need help playing Cornerstone, that's in my Volume 4 e-guide, and once again, Cornerstone is 30% maintenance. So this is how I'm preserving all of my equity. I'm investing most of my dollars into the indexes, especially low maintenance names like Cornerstone. At Fidelity, Cornerstone is 40% maintenance, I hear, so I'm actually saving a lot of money by owning Cornerstone over at E-Trade. If you want to go to other brokers with lower maintenance like Interactive Brokers or Robinhood, they might have Yieldmax with lower maintenance, but they won't even offer Cornerstone, or they won't have that special NAV drip that I was telling you about, okay? These 30% gains with Cornerstone. Just remember with Cornerstone, if you look at a chart here on a 1-year chart, yes, it's blowing away everything, but on a 10-year chart, it moves sideways to down. That's because you have to play it properly around its rights offerings, which many closed-end funds have. When you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. So I tell you how to play Cornerstone in my e-guides, and then I alert you of the Cornerstone rights offering announcement here in Discord. Because after all, Cornerstone did have that huge move recently, so everyone was asking, well, is the rights offering coming? Well, we never know, but we just watch the news closely for the rights offering. That's how we really level up our account. And I just watch Discord now for that news announcement. So Cornerstone, that's how I'm preserving all of my equity. Remember that. That's the reason why I bring up Cornerstone. First of all, when you're buying Yieldmax, you don't want to put too much in Yieldmax stocks because these are very volatile and they can erode your account significantly, especially in a bear market. They also have their dividends fluctuate in a bear market. Cornerstone keeps its dividends the same. But most importantly, Yieldmax is 50% maintenance, which is just a serious problem, okay, when you're trying to live the FIRE lifestyle. Again, you need to be able to outperform the market and withdraw freely out of your account to pay your bills. Airbnb is 30% maintenance, which is nice, but ABNB is 50% maintenance. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. It's the secret to everything that I do. Okay, the second stock that I have for y'all is AMD. It's up 3%. All right, AMDY, we're going to do AMDY through Yieldmax, obviously, but AMD has a nice yield and it's cheap in the indexes, okay? It's a large part of the indexes, and as you can see here on its chart, it's cheap, all right? It's at structural lows here. So AMD, it needs no further introduction. Everyone knows how popular this company is. Plus, it gives us semiconductor exposure. But again, beware, AMDY is 50% maintenance, all right? AMD, we can check the maintenance here. It's 30%, okay? But AMDY has 50% maintenance, all right? That's better than 100%. Misty is 100% maintenance. So not everything is, again, 50% maintenance, but AMD is 50% maintenance, probably because it's perceived as being less risky than Misty, all right? AMD is well established, and again, it's in the S&P 500. All right, last but not least, we have Babo. Also, I'm going to recommend one more fund before we go, if you could just stick with me until the end of the video. But Babo, as you can see here, it had a nice pullback. China, everyone sleeps on China, in my opinion. It's one of the largest economies in the world, and I'm not a fan of China, but you have to have a small amount of your dollars in China. Last Friday, when the market was down, we actually outperformed thanks to China. It was up along with Bitcoin, so it's good diversification to have, in my opinion. And Baba is one of the premier companies in China, all right? Internet commerce, okay, e-commerce. This is a big growth theme. So Baba, 50% maintenance, beware of that. It's going to suck up a lot of your equity, all right? So I put a small amount in Baba, just like the rest of my Yieldmax stocks, and I put the most of my money in Cornerstone, all right? Cornerstone, and I also bought 5,000 of this fund today, okay? This is the surprise fund that I wanted to share with y'all for all of my members who stuck around until the end of the video. It's THW, all right? I've been buying a lot of healthcare stocks in my FIRE portfolio service. All of my members know this. I buy a lot of blue chip stocks to offset Yieldmax erosion. I've been buying staples, I've been buying healthcare, and then all of a sudden, you know, all of the healthcare stocks got cheap. So I just checked out one of the sector ETFs for healthcare, THW. It's actually a closed-end fund like Cornerstone, but it has a 12% dividend, and look at this dip. It had a nice pullback, okay, back to structural support here. So THW, it has a lot of great healthcare names within it. Healthcare names help stabilize your portfolio, all right, in a down market. Yes, it's having a pullback right now, but anytime healthcare pulls back, you have to buy those because long-term, their uptrends are always intact, okay? So THW, there it is. It gives you some diversification away from Yieldmax and some safety in down markets. And whenever they dip, take advantage of those opportunities when you get the chance. Just make sure that you keep your available withdrawal high. We can always withstand over 20% corrections and live free from a 9 to 5. And so we have to make sure that we're following all the rules, including hedging our portfolios. Remember, I buy put options just in case anything goes wrong in my portfolio, all right? I sell these put options for nice gains every year. I get about $50,000 in premiums from selling options. So I sell put options to go long, lower my risk and lower my margin. And then I buy put options for insurance to hedge my portfolio in the event of a crash. If you need help selling put options like I do, that's my Volume 6 e-guide. And if you need help buying put options to hedge your portfolio in the event of a crash, that's in my Volume 5 e-guide. All right, if you need more help doing what I'm doing, email me for my e-guides. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, which is probably the most valuable component of my services. People like to have my number so they can call me whenever they need me. Just text me first for a heads up, and then we'll schedule a time after that. All right, if you like this video and you want more content like it, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.